Hey guys, it is Mark Coe for Wednesday, 1st of November. Wow, 2017 is going quickly. Wanted to take a look at some shorter term stuff today. I'm a big fan of doing top-down analysis, looking at longer term, but I know there are quite a few people that focus on some very short-term trading. So I just wanted to offer a little look into what that would look like using levels. And I wanted to use Euro here as an example. Euro's had some decent volatility the last couple of days, so we'll focus on Euro. And so the idea with levels is always the same, regardless of whether I'm looking long or short term, is I want to determine who is controlling the market. And the way I determine that is by identifying balance or consolidation zones. And once I've identified a balance or a consolidation zone, it's about marking tops and bottoms of that and seeing what the resulting action is. So for example, let's look at euro dollar. This is last Thursday, this was ECB day into new lows, and so all I'm looking at is consolidation. As you see, it's a 15-minute euro chart, so it's fast. It's not a long-term chart. And I'm picking a spot of consolidation, very tight consolidation. But what I'm looking at is top of that consolidation, bottom of the consolidation. Which side wins that consolidation? The sell side wins it. So how do I look resulting trade? And so this is actually quite interesting on a short term. Plays out very similar on bigger picture stuff, but this is just a 15-minute look. Top edge, bottom edge. Break of that bottom edge. Where does the resulting trade back to that same bottom edge? Again, the idea is once you've determined the dominant side of the market, in this case sell side, the idea is to sell top edges or tap back, as I call them. It's just a revisit, another approach back to what was once bottom edge. It's now a top edge. So tap back to it. So you see here you have an opportunity. You have a second opportunity, and all you're doing is you're continuing to mark the consolidation. So if you think about it like this, in a short period of time, you may have multiple consolidations marking what is all the activity in one day. But the resulting action, who takes it out of this consolidation? The sell side into another consolidation. Where are the edges within this? And you can see what I have marked as top edge. Who takes it out of this consolidation? The sell side. Where is the bottom edge within this, right? And it's tap back too. So even on a short-term basis, the levels are highly significant. The challenge with the short term is just that this stuff happens quickly, so you have to really stay on top of it, right? You don't continue to look at a level from 5 days ago that was short term significant that may not have significance now. You just have to be dynamic with it and continue to mark up. But as you see, early Asia into Europe, bottom edge taken out. So it continues to be won by sellers. Then all of a sudden you see some consolidation that the sell side doesn't continue to rotate lower, right? Big block of consolidation. That's what I'm focusing on. So the idea in here, from the day trading perspective, is that it gives you opportunity at top edges, at bottom edges. One of those two directions is the dominant side. In this case, it's the sell side. But there's still edges that exist. And so if you think about this rally, this is the next day, this is Monday, right? All it's taking you is back to this zone where the market does the exact same thing. So these levels continue to repeat. They continue to repeat. I mean, the exact same level. So the high Friday, 57. The high Monday, 58. The high Tuesday, 60, 61. The high so far on Wednesday, 57, right? Same high as Friday. Those levels are continuing to repeat. And these are levels that once you see on the chart, those were drawn on a Thursday night, on a Friday. They're coming into play again on a Monday, on a Tuesday. So there's a lot of good work that can be done even in the short term. You just have to realize the limitations of that in terms of what the real meaning is. And this I would definitely caution to look at it from the perspective you are a short-term trader, you're focused on short-term levels. Don't get married to them, that idea. But understand, they still work the same. It's the reaction to the levels. So continue to work those levels, continue to do your analysis, and keep up the good work. So for Wednesday, 1st of November, it's Mark Coe. Cheers.